Hello, everyone. Thank you so much for joining. Let's get this show on the road. Let's go grab this, and that way I can do both things at the same time. Here we go. All right, we've got some things to cover today. I'm going to start off with silver and gold. You know what? Silver and gold. These two assets are probably the most manipulated when it comes to keeping the impression of the strength of the dollar. And what we've noticed over the last little while is base it's been just almost like it's tethered. Silver and gold for the last week have remained within less than 0.5% fluctuation from silver being worth 1% of gold. What do I mean by that? Well, gold has been sitting around $33,000 and creating more highs. Now a high of 3,084. We're pressing towards 3,100, and at the same time, silver has been sticking around $34 and fluctuating back and forth. 32, 32 here on earlier today. And so this the silver being 1% of gold is obscene, because silver is supposed to be 10% of gold, about 10% of gold. So with gold being at $3,084, we should be seeing silver around $300 based on market demand, how much silver is above ground versus how much gold is above ground, and everything else. But with the market manipulation, the price of silver has been so sufficiently suppressed that people don't even know what any of this is worth anymore. And I actually think that we're going to see the BRICS nations coming together. This is Brazil, Russia, India, China, and South Africa. They have all partnered together to create the BRICS financial system. And as a result, I think we're going to see them come out with a statement. They're going to collectively come out with a statement revaluing gold and silver based off the energy contracts that they have with each other. Now, I could be wrong on that, but I believe that we've seen this kind of thing happen before, where everything needs to reset. And I think that when that occurs, we're going to see gold and silver actually have their value reflected accurately, with all of the suppression through paper contracts on gold and silver that has made it where we don't even know what it's worth based off of what the rest of the world is doing economically. Because also we see the United States dollar now decoupled from oil, for over 2 years. That decoupling has also made it where we got to figure out how much gold is, because if we're going to be backing some currencies with it, even the strategic reserve that Trump has announced involves gold. Well, we got to figure out how much it's worth. And right now, for all the manipulation that we have, we really don't know. And I think that this correction will be occurring. I wouldn't be surprised if it happens within the next year or two, where gold and silver just get revaluated to a whole new number. And it will make things topsy-turvy, so to speak. But it will also make it where silver and gold end up being valued at the right amount. Hey, Maureen, made it. You made it. So right now, with silver so suppressed, even from its all-time high of $49 an ounce, that suppression, I think, is going to quickly correct itself when we see gold and silver revalued to the benchmark that's being created by the larger countries that are creating energy deals without the US dollar. That level of influence that the BRICS nations have over the global markets, I believe we're going to see that reflected within these prices. And I wanted to bring up the fact that silver has been remaining approximately 1% of the price of gold here over the last year primarily. But especially now with the gold prices rising at a faster rate, at a greater rate than silver, we're going to see that tension grow, that tension between what it's supposed to be at 10% and where it is now. Silver, I can't imagine a better physical asset to purchase today. I love cryptos and I think there's a great opportunity there. But this, can you imagine silver just all of a sudden being worth 10 times what it is today? That'd be nice. That definitely is the type of thing that we see occur whenever these corrections occur, whenever these nations come together and like, we got to reevaluate the value of gold and silver, because none of it right now in the world markets are reflective of their true value. And I think that especially with the way energy contracts are being renegotiated today without the US dollar, the time is coming. The time is coming. Going into the US markets, we can see that this drop that we've experienced since January, where we formed that all-time high, this drop that we've experienced is still hanging out, now just testing this green line. Now, remember last time I talked about this, we had this deep dive here where we went as low as we were back. Last time we were this low was in August of 2024 on the US stock market. Well, this dip here definitely managed to rally back, and I know that there was actually $1 trillion that went into the stock market, into all of the markets in the US. $1 trillion went in, and that's what made this come back up. But as we can see, we are now again retesting this major line of support. So this action may continue. We formed a lower low here, and this high did not even come up to challenge this high here that occurred. We can see it right there. This high here did not even get challenged. We didn't even come up to touch it. So that gives me that from a technical analysis point of view, this here is likely to create another new low. And this is the kind of thing we're seeing in the news right now, is that we're headed in for a tough time economically. Now, I also want to stress that this is still manufactured. This is still in a controlled environment. Now, if it gets out of control, they just stop the stock market for a day, they stop trading, and they come back in and it gets revalued and we continue on. That's at least how it's occurred in the past. The last time it happened was in February of 2020. This, if it goes below these levels here, we will probably not be coming back for a year. The amount of money that if this $1 trillion comes down to here, that is lost money. 8%. Well, 8% of $1 trillion, that's $80 billion. An $80 billion loss would be catastrophic for that. And nobody who put that $1 trillion would be happy. So if that were to occur, we would see another sell-off, probably another bounce up, where we would, I'm going to zoom out for a bit here into a larger time frame. There we go. So we're probably going to see something along the lines of, oh, that's the wrong tool, something like this. If it were to bounce off of something, let's actually go from here. Let's get rid of that. So from here, probably bounce off of this support to retest the resistance of that green line and then bounce down to this support here. Now, if it comes down to 38,000 from the all-time high, that is a 14% drop. Normally, this is what the stock market is attempting to do every 2 years. But this here would definitely be a big loss to the economy. Now, if that occurs, if we see that type of price action come down to here, we can expect the response of the government to increase their rates. They need more foreign investment to be able to bring their balance sheet back up again. And so we'll probably see a cut in rates like they've been saying that they would do. We'll see a boost in rates rather, to increase more investment, and that will go against their what they've said they would do, is cut the rates so that the people at home, the citizens, can enjoy a better economy. But they won't be able to do that for very long, because if this drops down, they will have to go back into printing to bring that value back up again, to give the illusion that there's value in the market. The other option that they have is to transition the entire stock market over into digital assets, which then would wipe out a lot of large companies. We're seeing this occur in the retail space at staggering rates right now. We've got major chains that are going bankrupt, even though they've been propped up by international investors for years. They're being deliberately bankrupted. And I think that is indicative of them knowing that everything's going to be transitioning into a different type of economy soon. We've even heard the Goldman Sachs came out with a statement saying that they see us in a transitionary period. This isn't a recession period. This is a transition period. And so if that's the case, if this is a transition period, I think we're going to see a little bit more fear be instilled into people by dropping the price, getting them to realize something terrible has happened and we need to fix it, and that they will be very excited to adopt and support their nation's efforts to be a world superpower once again. And that's going to incentivize people to boost that market back up again. And by people, I mean the investors, the institutional traders, to reinvest into the U.S. economy. And I think that that's the direction we'll head, especially over the next couple of years. As a result of this, it'll be short-lived. We may create another new high, push the price up a little bit more. We may create another new high, pushing that price up a little bit more, but it will be short-lived, and we'll see that eventually drop back down again and correct itself. Now, this is recognizing that the United States also has the innate ability to defy other financial policies that occur throughout the world. And when we see what I was talking about, that re-evaluation of gold and silver that I think that the BRICS nations will be proposing, when that occurs, unless the United States swallows their pride about their dollar, which is not backed by anything now, not even by oil contracts like for the 50 years prior to 2022, because it's not backed by anything, I believe that America, the corporation, will be desperate to be considered a world superpower, and they will stop at nothing to save that dollar. And I say this simply because that's the sentiment of most of Americans, and that seems to be the direction that the Trump administration is taking this. They want to save their economy, and in order to do that, they would have to make their dollar look a lot more attractive than it does right now. And even though we saw these highs occur, which typically highs in the stock market coincide with dropping with a loss of price or a bearish confirmation from gold, simply because the precious metals are where people store their wealth when the economy looks bad, when currencies don't have the same returns, when there's less faith in the fiat currencies. More faith gets thrown into gold and silver, into precious metals. Well, when we take a look at what's happened, this new high here, this all-time, or that's the all-time high right there. This was January 30th. Well, on gold, on January 30th, right there, it was creating new highs. It was beating out the previous high from October. This was while, at the same time, the U.S. economy was also high. That doesn't usually happen. And so this energy buildup that we're seeing between the beautiful appearance of this, like if we take a look at the weekly chart of this, look at this. Look at how beautiful this chart is, showing a lot of strength. Tons of strength. This would make gold and silver go down. But if we take the same time frame, in fact, you know what I'm going to do is I'm going to go ahead and just pull this up. Oops. And let's go down here, and I'm going to pull up gold and silver, gold here. Dollars per ounce, and reset. And I'm going to make it weekly so that you can see it side by side. So this is the weekly chart on the top here. This is the weekly chart for the Dow Jones, and this is the weekly chart for gold. And you'll see this crosshair that I have here coincides with this line in the gold. So as it's coming up here, gold has been continuing to rise. Normally speaking, that is not how it works. In fact, let's go and line this up properly. There we go. In fact, you can see that while this was occurring, this is prior to 2020. This here, we call this an accumulation phase. This accumulation phase coincided with a drop as it went up. Gold basically stayed still the whole time. And it wasn't until after the crash of 2020, February, when gold really started to take off. And regardless of what happened, here's a little bit of a decline in the stock market. And that coincided with a decline in gold. That doesn't normally happen. When there's a decline in the market, there's a surge in gold. So why would they be going along the same lines since that time, since this crash, when before gold really had a struggle to get above? This, yeah, look at how the market was going up during this time and gold was going down. That's how it normally works. And since 2020, it hasn't worked that way. In fact, gold and silver have been following the market very closely. That is indicative of market manipulation and, of course, inflation. This is why we kept on saying for over a couple of decades, gold is actually not an investment. It's a hedge. And typically speaking, people invest more in gold when they see the risk of the dollar, be it like the risk of fiat losing its value or not maintaining its value. But lately, gold has been maintaining itself along with the markets, and that is because we're in inflation. So when this gets out of hand and the faith transfers from the stock market into gold and silver, we will see this price shoot down and this shoot up. Because people are going to be losing faith here and placing it here. And there is absolutely no amount of manipulation that the JP Morgans and the Chase Banks and the Black Rocks and Vanguards can accomplish to fight back the rush that people are going to have to get something that is going to keep them protected from all that inflation. So I wanted to share that because it's a very interesting time. This low that we're experiencing right now is a warning shot, kind of like a shot across the bow, so to speak. Careful, guys. This isn't showing the same type of strength that we've seen in the past. And in fact, we may see something like this over the period of this year if the U.S. has a difficult time recovering from this. Again, I want to stress, I think this is high-octane speculation based off of the behavioral pattern that U.S. has had for better part of 120 years. I got to plug in my phone here for a second. That the policy will be we have to go to war in order to boost our economy. Being that's the American way. My thinking is that we're going to see some sort of an attack, and it's going to be the thing that rallies the people together to go along with whatever war is being brought forward to keep the economy alive. Whether it succeeds or not is yet to see what happens. But we're seeing, when we take into consideration the black hole vacuum that AI has become right now for investor money, and how much AI will not be able to deliver on the promises that are being made to those investors, we will probably see, this push for a strong economy, but it's going to have very shaky foundation. And it's important that we have our ducks in a row to exit the markets at the right time. Right now, whether or not this is time to exit, I don't know. But if we take a look at this on the weekly chart, this is again the weekly chart for the US economy, for the Dow Jones. This support line right here is crucial. If next week we are not able to maintain a position above this, I fear that we're going to be headed down for a while. And it's not a fear in the sense that it will have much of an effect on me. However, I know that a lot of people are wanting this to go up right now because the perception is that if this can go up, then the cryptos will go up. And I think that they're going to I think that it is very possible that if it goes down, they will use that crisis as an opportunity to transition the economy into more digital assets. Similar to what happened in 2020. Stock market crashed, and then Zoom became a household name. The same type of thing will be occurring here, and it'll probably be something like, the next AI model, or maybe it's going to be Stargate, the new AI project. That'll become a household name where everyone's just going to know that, just like they all of a sudden knew Zoom, because the transference from old asset-backed commodities into digital assets is what is going to drive the economy going forward. And that transition period will have some bumpy road. It'll be a bumpy road. Let's now take a look at some crypto charts here. We can see this is again the weekly chart. The market cap for the top 30 cryptos, or rather this is an index of the top 30 cryptos, has retraced back down. We're now sitting at this 18,000 level, but we are already forming this low, and it is higher than this low. With this high higher than this high, we now have a trend. And so this high was a little bit uncertain because we had to come back from this period here. We call this area recovery phase. And now we're into a little, yeah, we're just coming now to the top of our recovery from the high that we had before. With this low being higher, it is encouraging. It's very encouraging. That trend line, I believe, let's go look here. Yep, there it is. So that trend line will provide support going forward. If it dips below, we can expect it to come down and find some support in this area here. This is around the 8,000, 9,000 level. Well, actually, probably closer to 11, because that'll be the top end of this consolidation zone here. So this area here may be where we come down to rest and find support to continue going up. That being said, this is a critical point within the structure of this price action. And I believe that it is very, very real possibility that in the next month or two, something is going to happen. The American economy needs drastic intervention right now. The quantitative tightening has eased, but they haven't gone into quantitative easing yet. And so the balance sheet is not increasing in the American economy, meaning the necessity for something to occur to change the trajectory of the American economy is what's the word I'm looking for? It's immediate. It's what is the word I'm looking for?
Eminent.
Starts with an eminent. Thank you. That's the one. So this bounce, this low on the weekly chart is significant. Having bounced off of this trend line, I believe we're going to see it come up and re-challenge these all-time highs in the next, I'd say, well, let's see what this shows if I bring this out to about the same size. Yeah, so it says here 90 days or so, 91 days. This period of time, very likely to see the action coming up to challenge these all-time highs. If we are going into a transitionary period, which I'm quite certain we are, that transition will necessitate increase of funds going into digital assets. Bitcoin. Let's just bring this up now. I don't need the other one. Bitcoin is just bounced off of this line as well. Isn't that interesting? Of course, it's, the crypto 30 and Bitcoin are very related, considering Bitcoin itself has a market cap of $1.7 trillion. And the other 29 coins are, they basically follow suit. But this here, I like to bring up this chart because this is a major marker here. Throughout history, when we take a look at the patterns, whenever there has been an election, here's the 2020 election, here's the 2016 election, and the 2012, I apologize for all the lines there. Those are just different support levels that we're monitoring. But these points here, whenever there's been an election, cryptos have never come back to challenge these levels. And so right now, what we're seeing is a very, very natural pullback after this phase that came through after the election. Natural pullback to find support on this long-term trend line that goes back all the way from November 2022. So this run here has just simply confirmed itself as going up. If it goes back down, we were going to be starting to test the 2024 election level. And that has never happened in history. Not to say that it can't happen, but that we look at history to find the patterns in how people respond to these economic movements. And what we're looking at here is price action. But this price action is simply telling us what was the emotionality of people while this was occurring. And the emotionality has always led us to higher highs and higher lows after an election. So following this trend line on that weekly chart is a very, very encouraging prospect for people who are in cryptos. Now I'm going to go down to the daily chart to look at Ethereum, because this one here is showing a different story. In fact, over the last little while in particular on the daily chart, it's been sharply going down. And even my squiggly line, which I was anticipating another test of this trend line, that has been thrown out the window. This is why I tell people, don't listen to a word I say, because I don't really know, I don't have a clue what I'm talking about. That's because I'm looking at this from a technical standpoint, from a technical analysis standpoint. This line here, we haven't touched it for a long time. I was expecting after this dip for us to work our way back up and find some resistance on this line. But we're not doing that. In fact, today already, cryptos are down. All of cryptos. Look at all the red lights. These are all reds showing a decrease in value today. So why is this? Why is this occurring? It's because well, let's go back to January. January of 2024 is when we got the announcement that ETFs were going to be issued on Bitcoin. Well, Bitcoin was already issued, but on Ethereum and similar coins. There was talk about XRP, Doge even getting an ETF, which is an exchange traded fund. Cardano is even on the table to become an ETF. In the realm of asset-backed currencies, not debt-backed currencies like fiat is, but in asset-backed currencies, that is called a Ponzi scheme. And so having that announcement coming forward at the beginning of 2024 created this big jump where people were all excited. Oh, look at cryptos are becoming more mainstream. But then what's happened is the price has actually come down to below those levels. And of course, on Ethereum, these are levels lower than what happened right before the election. In fact, here's the election day, and it's down 25% since then. What is happening? Well, we have to remember that these ETFs that were purchased, and for every ETF that was purchased, none of them were on chain. None of them occurred on the books in the crypto ecosystem. So this digital asset that everybody thought was going to go take off because of the ETFs, people realized, especially after reaching this all-time high 3 times, or not this all-time high, but this high here 3 times without challenging the all-time high. That's because people were realizing, all of this money hasn't actually gone into the system yet. But it was announced here, and people were already starting to purchase them at, with the expectation of future prices being, $5,000, $10,000 on Ethereum. Well, what's interesting about that is the price coming down here. Since the price has dipped below these levels where they first made their announcement, since that time, this has been where now those companies have been approved to take the money that they got during this time and put it on chain and actually buy the assets. And they got approved by the Security Commission to stake those assets. So now they can use those assets as basically a savings account, giving them an APR every single year. So this is crazy. They announced it here at this price. And when the price dipped below, they started actually putting these transactions on chain. So what did they do? They accumulated all that money off chain at these prices because that's what they were doing. They were selling these ETFs hot off the press this whole time, getting this money for those assets at this time, and now they're putting it in. So what did they do? They simply boosted the entire crypto ecosystem with this fake news about ETFs going on Ethereum. They didn't. They went on exchanges to be traded as a separate financial instrument, and people just responded to that emotionally. Well, that emotion ran dry, and it has been dipping down ever since. And the people that started this, they knew this was going to happen. That's why they did it, was so that when the price comes down, they could take all of the money at these prices and actually put it on chain now. Now they're going to experience growth, because not only did they, they made purchases. Let's say there's a lot of volume at this level here. So I'm going to take this level. A lot of these green tips here, that's just the last little bit of spurt that a lot of investors are just trying to squeeze out as much profit as possible. But when we take a look at a lot of price action that goes squiggly around, that's where the volume is primarily. So we're going to average that out right here. Let's say this became the average price that they took money in for these ETFs. Well, the price has gone down on average. Again, we're going to go to an average volume area where there's lots of price action going up and down. And that is basically where we are right now, a 42% drop. So let's say they took in $1 billion here during this time. They are now taking that billion and getting $1.4 billion worth. After that, they're going to take that $1.4 billion and ride it back to those same volume levels at an increase of 81%. 81%. It's a 40% drop, but now it's an 80% rise. You betcha, because that's how the math works. This number here dropping down to this number is a 40% drop, but coming back is an 80% rise. What does that equate to? I don't even know. I'm not that great at math. But the increase of value that has occurred as a result of the positions being taken at these lower levels, and we could see it continue. Look at how this high here, I'm just going to get rid of this so we can see this high here didn't even challenge this pivot point here. And it was another pivot point right there as well. Let's get these tools out of the way. Well, it's not even trying to go higher. So likely we'll continue to see some downward momentum in cryptos, maybe even find support at 1,500 before that increase occurs. If that happens, now they're looking at a 121% increase after already increasing their balance by 40%. Now they can appreciate even greater returns when it comes back up. This is how they do it every single time. Whenever there's been a transition from one economic model into another, we saw the same thing happen in the 20s. A lot of people lost a lot of money, but the big corporations sure didn't, because they controlled this whole action using the same type of strategy. Because the entire economy by the end of the 20s was already fully fake, where it was completely debt-based. Did you know that not a single US dollar, that fancy currency that comes out, the greenback, that currency has not had any validity in terms of money since the Federal Reserve, technically. But that asset is not backed by anything. And they did that purposefully so that we would start trading debt as a means of exchange instead of money. And that process that they used here was the same idea. These ETFs were sold to people during this time, and they didn't exist on chain at all. It was non-existent. The money did not go into Ethereum. The money went into pockets to get a great big treasury stored up so that they could go ahead and buy it at cheaper prices later. Okay? It's no different than what I do with my money. The only thing is that if I were to put together policies like this, I'd go to prison for selling something that doesn't exist. Now it exists, so everything's okay. We'll see what happens as time goes on. But this is why this is doing this and coming back down. It's so that these ETFs that were purchased at this price, that started at this price, and all the money that was brought in ETFs throughout 2024, there were talks about $500 million being dropped every single week going into these ETFs across the ecosystem. So all of that money is coming in at this level to have greater gains going back up. Of course, investors are going to be happy about it in the long run, but we're not any better off than we were throughout the 20s when the transition from when the Federal Reserve came into play. It only took them 15 years to completely eradicate the currency. Same strategy, just a different mechanism, just a different financial instrument. That sounds doom and gloom. It's not. It's just recognizing, okay, so if the markets are going to be manipulated this much, we just need to be mindful of it. That's all there is to it. And so we reflect our positions differently. I was thinking, oh, look, this low here, and then it came all the way back up, and then it, did this. I figured that was going to be where we retested this trend line. Didn't happen. Well, then I figured we were going to retest it after this. Didn't happen. So that means we could very well likely see another test of this line before coming up to test that trend line. Either way, knowing that it's being manipulated, it takes away the bias for us to have it go up. At least that's the approach that I'm taking. Let's go through some other assets. XRP. That has not experienced the same type of volatility. And I think the reason why is because it is definitely a strong staple for banks to facilitate transactions between each other. And that's what I think XRP is going to primarily be headed towards. ADA has experienced the volatility, but it hasn't experienced the same downward trend that the other assets are experiencing during the same time. And I believe the biggest reason why is because ADA is being used, and the entire ecosystem of Cardano is being used by nation states. That is significant, where you have countries coming together, and currently there are over 50 countries worldwide that have recognized that they have to it's their job, because they're the government duly elected. They know that their responsibility is to their people. And in order to facilitate and complete their contract with the people to be an entity that helps them safeguard their property, they are adopting Cardano as a means of exchange recommended to their people. So that is, I believe, why we're seeing a very different price action when it comes to Cardano right now. Is it going up? Is it reaching up this all-time, this 2024 high? Nope, not right now. In fact, we've noticed that triple top and another pull down. But here we are at this trend line. We're now making a major test today. We can see on the chart here, we've actually dipped down below that trend line. It's not the end of the day yet. Also, I've talked about this whole rectangle here that I've painted out. This rectangle is a consolidation zone, meaning, and what it means is until the price leaves this box, we actually don't have a confirmed trend anywhere. So right now it's dipping down a little bit. I've got some positions down here where if the price comes down, I'll buy again because I believe that this will provide some support. But of course, because of the adoption that Cardano has versus a lot of the other coins, I mean, even Ethereum, the only people really adopting Ethereum are large, massive, multinational corporations that want to create real-world assets out of our monthly bills like phone, internet, water, taxes, all of those things being tokenized. The people that manage those assets today are attracted to the tokenization through real world assets on Ethereum, AVAX, BitTensor, larger infrastructure coins. They want to see this whole thing take off. And so Ethereum has been backing that. Whereas this is a different ecosystem with a different vision, with a different, a very forward thinking community. Because everything that happens within Cardano is actually brought to consensus on chain. So Cardano itself and the entire ecosystem of this asset, it doesn't behave the way that other assets do, because the focus and intention of the community that backs this is totally different. Totally different. More forward thinking, recognizing that people must have autonomy over their property. And if they don't, then we don't have any rights. If we don't have property rights, what rights do we have? And so this ecosystem, I believe, will be showing off its true colors here within, especially this year. Right now, like I say, we are testing this trend line significantly right now, but this consolidation box, doesn't matter what the price does inside here, there is nothing that we can use as an indicator of which direction is it going to go yet. My tendency is to think that it's going to go up. And the reason why, and I'll bring this up now, because, there it is. When we on this lower chart, remember how I was comparing the two charts and the timelines? Well, in this case here, I'm going to switch this gold chart at the bottom. I'm going to switch it for the total market cap for cryptos, excluding Bitcoin and Ethereum. So, oops, that was the wrong chart. There we go. Gold total. We're going to exclude Bitcoin and Ethereum. All right, so let's go to the daily chart on this one as well, so that we can see and comparatively see what's going on. Reset. All right. So what do we have? We can see that this big candle where we touched this top resistance came back down, and we've been consolidating ever since. During that same period of time, altcoins have been growing. They haven't been growing very much, but they are forming higher highs. We can see it more if we go into a more zoomed in perspective. Cardano has not been growing, creating new highs. However, during the same time frame, let's bring it back to, there we go. During that same time frame, all of the ecosystem, excluding Bitcoin and Ethereum, so this is just altcoins, more money has been coming into altcoins than what we've seen coming into Bitcoin and Ethereum. So the diversification is occurring. People are coming in with Bitcoin and Ethereum, and then they're diversifying their coins immediately, going into altcoins, because this has been steadily increasing over time. Isn't being reflected in Cardano at the moment, but this is giving us a leading indicator of the direction of the market. With these highs coming in progressively higher, this trend may very well be on a reversal. And we can also see that although over the last, there we go. So even though we see this low coming down to challenge these previous lows, on this chart, this low here, and let's just zoom out a little. Oh, no, I don't want to zoom out too far because then I can't see the scale. There we go. This low here is just barely lower than this low. Whereas this is actually, it's going down a lot lower than what it was at this point. And even here, Yeah, see, right now on Cardano, we are challenging this low there, whereas this isn't challenging it. So the increase that we're seeing overall within the altcoins is indicative of growth coming. Okay, it doesn't always happen that way, but that's why I remain fairly optimistic about this price here, this price action. I think that Cardano will still come up and meet this high. We might see a little bit of a dip beforehand. That's okay. I've got positions ready to buy at these levels as it goes down, so that my dollar cost average keeps getting driven downwards, so that the profitability of that movement goes up. Doge is actually showing us more of a increase similar to the altcoins, having this high here beat out the previous high, and this price action coming out to break out of this long-term trend. This trend is long. It comes all the way back. This is January 17th. This trend has been broken by Doge at the same time that this high in the altcoins has beat out these previous highs. So we're seeing Doge actually reflect the motion of the altcoins a little bit more than Cardano right now. And again, I think that's because of the pro-American narrative that has come out as a result of things like the Department of Justice, or the Department of Government Efficiency, headed up by Elon. Injective, another token that we look at every once in a while. This one here has been pulling back, similar to how ADA is, testing a low. This one here would be, if it goes below this, then we would expect further going down. But still at this point, while we don't have a bullish trend confirmed yet, this pullback will likely find some support and will retest this trend line. Eventually, I think that we're going to see this pinch off. And whenever we see this type of action, this is called a descending wedge pattern. The descending wedge pattern usually results in a buildup of energy, and then it breaks out one way or the other, depending on what happens. But that energy buildup occurs where the price action gets smaller and smaller and smaller. So I think that that's what we're going to see with Injective. On Algorand, another infrastructure coin, specifically doing very well in the realm of storing data for AI on the cloud. This trend, this here is currently having a little bit of a difficult time getting above this resistance, where there has been, or rather this support. It's showing some resistance now because the price is underneath. At the same time, this long-term pivot point here has also been something like over, when was this? This was March 23rd is when it bounced up above and has been maintaining that level above this for ever since. So that's encouraging when we see that. And of course, because it also coincides with the higher highs in all of the altcoins. No, this isn't Optimism yet. This is Omnis, or Mantra DAO. This one here, we've been considerably consolidating for a while. Whenever we see this kind of consolidation, there's no point in trying to determine which direction it's going to go. We simply have to wait for it to break out. If a price action is not creating higher highs or higher lows, or vice versa, lower highs and lower lows, there's no trend. It's called market going sideways. Until we break out and we actually get a confirmation, there's no idea which direction it's going to go from here. Again, though, we do see that this high here coincided with this high in the altcoins. As time went on, more money came into the altcoins, creating a new high, but it was actually going down at the same time for this particular DAO. Doesn't make it bad. It just means that this is likely a pullback that will get corrected as the altcoins come back up again. Optimism. I just called it Optimus Prime. Oh my goodness. That brings me back to the good old days of Transformers. So here, again, consolidation has been occurring. The highs and the lows are not getting beat out. Right now, we do see the price inching its way below this consolidation zone. But actually, you know what? Nope, that consolidation zone started here. Yeah, that high there. So this consolidation zone currently, it's a little bit below. We also see that we have a long-term trend line as well, providing some resistance. So it makes sense that we're seeing it dip back down again to retest this support level here. I'm just going to get rid of this. If it goes down much further, we can expect it to follow this trend going down. Now, if that occurs, for those who have positions right now, you may want to sell half of the position right now, especially if we see it break down below this level here at the 78 cents US. If it breaks below that, I would definitely be selling and waiting to repurchase as the price continues to drop. That way you're not losing too much of that opportunity. Now, how far down? Where's the next support? Let's just see here. Let's zoom out to the daily chart. Ah, yeah, okay. So we are right now sitting also at a very crucial part of the market structure. There have been, why does it do that? That's weird. There we go. So this here, this area is major. That's a major support. I'm just going to draw a box around that. So you can see this whole area, major high volume within this price action range. So that high volume is going to provide some support for this. If we dip down, we'll probably dip down to 64 cents ish, because that's where that next pivot point is, where we saw the price bump up against it there, and then from above right here. Fetch. This one here is an AI coin. I like looking at this one to get an overall idea of the state of the AI ecosystem. And the reason why is because Fetch AI is a major conglomerate of several different developers within AI. But the key here is that these developers have been doing this development since the 80s. So they're here for the long haul. And they've been conglomerating to ensure three major components are being present within AI, especially for the end users. And that's going to be, the first one is privacy. Right now, the way it is and the way the world is headed, there is very little privacy within AI. And this company says that's got to stop, because people are going out there getting AI to create content for them, and none of that content is being retained by the user, by the creator of the content, who is simply using AI as a leverage for their creations. This company wants to ensure that people maintain privacy. Another thing, they want to make sure that AI maintains its position as a servant, not as a leader, not as a dictator, not as a telling us what to do. We tell it what to do, because it is only artificially intelligent. It's not intelligent. It's artificially intelligent. And so their approach is, let's make sure this thing stays our slave, that we command it. So that's the other thing. And then the third thing that I like about Fetch AI and their approach is the decentralized nature of their program, or of their project. They don't want to see this be something that is controlled by one entity. They want to see everybody have their own autonomy over their own data. And in order for that to occur, the model must be in alignment with blockchain principles. And so they are working towards and implementing, especially throughout this year, we're going to see a lot of their implementation, where people can actually start signing up for these products that they've been developing for all this time. And so that's encouraging. Also, you can see that steady growth has occurred. This is on the daily chart from March 20th. This growth has been very steady, and we can see that reflected in these trend lines. Having such steady growth when most of the cryptos throughout this time did not experience this. They did not experience this steady climb throughout from 2020. This is indicative of a strong company that's positioned to do very well. So I like it. That's why I like it. Polygon, nice and low right now, sitting at the very bottom of a long-term trend line all the way from November of 2022. This is very, very probable this is very likely to occur simply because Polygon is more into the gaming realm, and I don't think we're going to see gaming take off in the same way that we're seeing AI and real-world assets take off in the next few months, simply because a lot of that infrastructure needs to come into play. It needs to be used and adopted for the gaming industry to really start to take off. Gaming is waiting for AI. And the reason why gaming is going to be such a huge thing is, well, there's a lot of different reasons, and they're not necessarily good. But storytelling is completely being revolutionized by the video game industry, because instead of being presented a story, now you can have a character that you control and move through the story. But here's why the gaming industry is going to be taking off so drastically. Today, in order for the environment for your character to explore the gaming environment, the entire environment must be programmed by programmers. AI is going to alleviate that. The budget that gaming companies, like we take a look at Blizzard or EA Sports or any of the other large, what's the other one? I can't remember the name of the company, but they make a lot. They've made a lot of mainstream video games to do with role playing and so on and so forth. Well, those companies are spending 80% of their budget on programmers. And what AI is going to do for the gaming industry is make it so that the environment is generated in real time in front of the character that you're controlling. So they don't need to have programmers program the entire game. They simply need to teach an AI how to generate the environment in real time. So now they don't need to spend that 80% of their budget on programmers, and the escalation of realism that's going to be coming forward as a result of this renaissance is going to change the landscape of digital entertainment going forward. And so we're going to see that occur eventually, but right now I think we're going to see continued drop because people are looking for short-term results. Well, what does that mean for us? Well, when Polygon is at all-time lows, it's a good time to buy. Desync, this one here, also finding some lows throughout time. When I bought, it was back in June of last year, so I'm down quite a bit. Here's June. June is right here. So I'm down, 30-some% on Destra, on this desync. But this particular project is all about having decentralized storage of data. So, we talked about Fetch and how it's decentralizing AI so that no one is controlling it. Well, and that sounds dangerous. Well, then who is it controlled by? The individual user, just the individual user. But the entire ecosystem around Fetch, the people that are steering it right now, they're simply developers within AI over a long period of time. Their project is just in making sure that the tool itself works in a private way. Well, Destra takes it a little bit further and says, hey, when you're creating this content, where are you going to store it all? And they're creating the infrastructure for us, the general user, to create content and have it stored in a decentralized fashion. Again, with privacy, because that's what blockchain does for us. So right now, sitting at 13 cents, I will be selling at the all-time high, probably 50 to 60% of my holdings. When that time comes, right now, from here, right now, that's a 300% increase from this low. So good position, good position. 0 by 0, experiencing the same type of thing right now. Just created a new low. It's actually come up above. This is encouraging. This is an encouraging sight. So this level here has provided major support in the past. We dipped below it, but we've now come back above, and the price action is already looking for that support again. Now, if it continues to drop, that would definitely be bad for the price, but the amount that it would drop would be perfect time to come back in again with some more. Again, this is another asset that I purchased back in June of last year. And it's down, but I just keep buying as it goes down. PAL, this one here, this one has been quite the story actually. A roller coaster even in many ways. As it was climbing up in this area here, I was watching it, and then it did one day where it dropped 60%, 70%, and then it came back up. And since that time, it's been coming back down, now resting at it even found a lower low than when it did that one day. But again, we're seeing it coming back up and finding a little bit of life here, and that's a good sign, especially when again we've got over the long term in altcoins a continued rise. The reason why we don't see that reflected here is because PAL is a smaller market cap, and I don't even think it's $500 million. I think it's under 500 million. So yeah, that's why we're not seeing this asset be reflected in the same type of price action here, creating new highs. WorldCoin, similar chart. Oops. Let's change it for this one. WorldCoin at also lows. I'm going to just zip through the last of these here. These are more infrastructure coins for either AI, storage, or gaming. Beam, also very, very heavy into the gaming scene. It's showing some nice life here since finding that low. Farcana keeps on dropping. That makes me happy because I bought some more. And Superverse, this one here has fallen down since it was headed up here throughout 2024, and then it's rallied back down again, finding support at these levels here, which were back from 2023. Cpool, this is a real world asset. This one here this is a very newer project in real world asset space. So their movement going up, finding this all-time high, that all happened within 2024. So this rally back down to these levels, where basically right where it started, that's very indicative of companies that are under 2 years old in this space. NPC, the meme coin. I don't have much in this one. I think I put in $100 back in June just to see what it would do. We do see a nice rally coming in here over the last the last week or so, and looks like we might be finding some support at these levels here. That'd be nice to see us bounce right off of these. It'll be interesting to see whether or not that retracement is enough. SPX. This one here is another meme coin. Specifically, this community actually has a lot going for it because of their cult-like fanaticism to take over the stock market, and they bring forward a very strong argument. The stock market is, it's measured with the S&P 500, the Standard & Poor. But this one here, SPX 6900, is saying, hey, when you take into consideration that the amount of money that's coming into cryptos right now is growing in size to the degree that it will likely exceed the Standard & Poor 500 index, that's a big deal. And they intend to have a full proposal be submitted to have this index replace the S&P 500. Whether they do it or not is not really that important. What's important to me when I look at what's happening is the cult-like behavior that is bringing this into fruition. The number of people that are increasing there over this last couple of weeks, the number of people who have bought more has doubled since the beginning. So this price action that we're seeing is a large number of people coming in, not necessarily with large amounts of money, but with a lot of numbers. That is indicative of a movement to consider as a viable opportunity. Again, it's a meme coin, but just like Bitcoin, in the sense that it's a team of people coming together, a group of people coming together with a vision of what's possible, and they are creating a community around it. That's basically what Bitcoin is. And so this meme is not much different. There we have it. That is a longer market analysis than I normally go, but I wanted to cover everything because it's been a while since I've gone through all the charts. And because of the red numbers that we have here today, I wanted to make sure that everybody got a level-headed update as to what is occurring. And overall, I'm actually encouraged by what I see. Bitcoin here is showing a little bit of resistance at this short-term trend line, but that short-term trend line is only from January. This long-term trend line is definitely going to provide more support than this trend will provide resistance.
I have a question, Paul.
Yeah.
So being on social media and looking around or whatever and seeing some ads and whatever, right? So there was an ad that was from Mark Cheney. Is that his name? The new prime minister.
Oh,
right?
Carney.
Yeah, Carney, that guy.
Yeah.
Anyway, it was that they have now got the what is it called? Anyway, it's some Canadian thing that we can go in and buy crypto to offset the tariffs for that Trump has been. And
Interesting.
Yeah, it was interesting. So I wrote it down, the name of the company that we can get crypto from. It is called Hypertrade.
Hypertrade. Okay, let's go check it out.
It works with AI. You can either have a system where you can trade by yourself, or you can trade with a broker. So
is it Hypertrader maybe?
Just let me look, because he did send me an email.
All right. Let's go see what they got here. Yeah, it's a trading platform. They've got different versions of their...
Yeah, hyper-trades.com.
Hyper-trades.com. Okay, let's go over there.
Yeah, because these guys are promoting it through, Carney, who's, people support supposedly. And interesting enough, remember when I lost a bunch under one of the other ones. Well, I can't remember what it's called. Anyway, that one was promoted through Polyev.
Wow. So that gives me that makes me line up all the red flags there.
Yeah. So there was one that was an ad. Yeah. So there was. Well, it's in the news. It's in the news saying that Cheney has kind of thwarted and made Trump mad because of this.
Yeah.
Right. And I'm like, but is it true, or are they just, part of the scam to get people's money again?
Yes, this would be a scam, and the reason I'm saying that is because here are the here are the packages you can get with them.
Mm-hmm.
So the trial, not much of a trial if you got to put $360 into it.
Mm-hmm.
And the things that they have here, global market access, you don't need to spend $360 to do that. You can go set up an account at Virgo or
Mm-hmm.
KuCoin or Index or Kraken. Like that's how you get global market access. Industry leading prices. That doesn't mean anything. There's a price, and it's the going
Yeah.
price. It's not industry leading. Expert support. So yeah, I'm going to say this is another scam that they're
Yeah.
just
So
piggybacking off of the narrative that we see currently in the political
yeah.
realm.
So they say, you can make some money right away. And
Yep.
and so this is why I wanted to kind of put this in here is that if you are doing something like this and you see it, don't do it.
Yeah. This
Absolutely,
is
because I am a testimony to say this is bullshit.
yeah, definitely.
You
Thank
know,
you for bringing it up. Even this, look
there's
at
a
this.
lot out there.
Leverage up to 1 to 20. That's illegal in Canada. Here's leverage up to 500. That you only get leverage 500 to 1 if you are trading forex through an approved broker. And this is not an approved broker. There is no
They have a
uh
licensing. He showed me where the licensing was.
oh yeah, look at that, eh? Authorized and figured. Yeah, yeah. That doesn't mean anything.
That's what I said. I said I'm going to do my research through,
Yeah,
you know. So he's going to call me tomorrow and I'll be like, "Yeah, I see your packages." And I'll tell him about some of these things that I can do for free. So why do I
yeah,
need
exactly.
$360? And then I'll tell him a few of those things. What you said, leverage up to 120, leverage up to 500, illegal in Canada.
Yeah.
So I will. Anything else that you see that I can tell him that he's a fraud?
I mean, 15 grand withdrawal execution time up to 48 hours. I'm
Yeah,
paying
right.
15,000. I'd rather take the $15,000 and just buy myself some ADA, thank you very much.
Yeah.
Why would I give
Mhm.
them $15,000 to wait 48 hours for a transaction?
Yeah. Yeah. That's also gonna be a red flag for me. I'll tell him that in your packages, I want it immediately because I can do that through the other platforms I do.
Yeah.
Why would I go through you?
The financial calendar, I can show you where to get financial calendars
Uh-huh.
for free.
Right.
Expert support, dedicated portfolio manager. Right. Oh, see, look at that. There's not even a difference. The only difference between bronze and silver, that extra $10,000, the only difference that you get is instead of an illegal leverage, it's a more illegal leverage. That's the difference between the two packages. They're identical. They're both identical. All the way down the line, they're both identical except for the amount of leverage that you're illegally allowed to have.
Mhm.
That's what you're getting. Their $10,000 buys you.
Yeah, because I did tell him that I said I had a friend that I trade with that who's been doing this for a very long time. So I'll be talking to him.
Oh, look, you
Holy shit!
can put in $1 million too.
And what's the difference?
Well, you still get the educational center access. That's good because otherwise you won't know what you're doing.
Well,
Global market access because
well,
that's revolutionary. It's everything is the same. The difference, again, well, leverage is still 500. That makes sense because it would be impossible to go higher. There's nobody that offers more. The
trade
trading
spending.
spread is less than 50%. The trading spread is less than 50%. I, what does that even mean? Because you don't measure a spread by the percentages, you measure it by the pips. And then withdrawal execution time is instant. You get $1 million and now you can take your money out immediately. That makes sense. Wow. Wow. You know what's so sad about this is that there are a lot of people that unfortunately get scammed by these things.
Are
Well,
going to
let's
be doing
look
this.
at Jay. I told you about Jay and his dad.
A lot of people are going to just fall for it, especially because it's linked to a prime minister. So it must be safe. Must be safe.
Must be safe. Yeah.
Must be safe. Everything's fine. I'm going to jump in now. You're going to probably have a lot of people who have been very nervous about crypto and don't realize like you couldn't go more in the wrong direction.
Yeah. Well, and the thing is because he's saying, you know, we're going against Trump. Well, there again, a lot of people are going to jump on board just because this goes against Trump.
Right. Yeah, that's a big selling point from what I can see amongst most of the people I know.
Yeah.
The division that has occurred as a result of that is just staggering. And I think we're going to see more and more people taking advantage of these things.
Yeah. And this is why I wanted to get it out there. Get it out there, Paul. Get it out there that this shit is everywhere. And I have not had more control over my money than I have working here.
Yeah. Oh, Maureen, you asked a great question. Talk more about Cardano's vision.
Incoming voice call from one set.
Sorry.
Oh.
Not bad.
Expand on that question, Maureen, if you could. Oh, you're muted still. Over on the bottom, is the in our meeting? Do you see the mute button there?
Yes, I do. I was pushing on the icon below the mute button. So yeah. So you know what occurs to me after asking that question is as you go through these different coins and things, what I noticed is that I really paid attention to Cardano and INJ because I had money in it.
Mm-hmm.
You know, there's a natural heightened awareness and memory that goes when you have this emotional investment.
Yep.
So I'm thinking, and I just am going to ask this question, not that one, but what would it be if we just invested a little bit in all of the things that you're invested in? And that way it would give, I'm just thinking we'll have a heightened memory and awareness of what's going on. I don't know if that's a good idea, or you, of course, without holding you responsible to whether, and again, you only invest what you can lose. So just with that idea in mind, that's what's occurring to me. Is I don't know if that is appropriate or, you know, possible or, you know, whatever, but I thought I'd ask that.
Audrey, I'm going to let you answer. Oh, but you're muted.
So this has been my book since I started investing. So every day, and sometimes I miss a day or whatever, but I write what I invested, how much it is at the moment. So I go into my Lace, I go into my MetaMask, and I go into my NDAX, and I write down what it is, how much I have in there today, kind of thing.
No.
And so I have invested in many of them. So I have all the way from ADA, Desync, Woo, ARC, FAR, 0x0, Wild, Fetch, IMX, and I've put in approximately 200 each, and then some I've added up to 500. Desync at one point, because it's down now, I'm going to buy some more. You know, it's about half of what when I bought it. Right now, if you want to put money in, now is the time. Because from where I bought it, some of mine are half of what I bought it for. Right. So if I bought it at 1,000, I have 500 in there now. But I'm going to let it ride because I know, talking with Paul, don't worry, buy low, sell high. So even though it's gone down, I'm gonna, what's that called? Cost average?
Yeah.
Dollar cost average.
Dollar cost average. So I'm gonna put some more, 200 maybe in a few of them again, and dollar cost average to go back up. So that's my strategy. And once I hit a certain point, like Paul says, once I hit a certain point, I am going to pull out my profits and leave my 200 or whatever in there to ride.
I really like that. And I'm thinking as an alternative to dementia.
Yeah. Now, one thing
really involved.
I just want to say though, one thing to consider is like you got the two that you mentioned. You got ADA and Injective. Awesome. But if you add a whole bunch right out of the gate, you may feel a little overwhelmed. So be mindful of how many things you're paying attention to at the same time. One of the reasons why we're able to do this is like with what Audrey was talking about. Even though all of those different assets are listed, there are only 2 wallets that she needs to check. Right? So that allows us to be able to do that.
Really. It's Lace, and I check MetaMask, but sometimes MetaMask doesn't have some of mine. So then I check Uniswap.
Right, but it's the same wallet.
Yeah, pretty much.
Yeah, it's just a different platform to read the wallet. But yeah, those 2 accounts, because they're all together like that, it's a lot easier for us to check. However, if you go that route, Maureen, it's a lot more complex than just having a Lace wallet, because now you can have all kinds of coins within one wallet. And it can be a little bit disorienting at first. So, in light of that, I would say let's pick 5 that you like and just start with that for now. Because when you're getting into like these other coins that are on the MetaMask wallet, or if you're using Uniswap to check them, that there is going into specific companies within the entire ecosystem. Whereas if we just get you into those 5 basic coins, those are likely going to be the altcoins that those companies are using for liquidity. And that's going to be a lot easier for you to follow. Now, if you want to spend more than an hour a day looking at charts, I can show you a lot more assets. But I know your goals. I know what it is that you want to accomplish. And I don't want to see you spread yourself out so thin that now it's not fun.
You know, this is a dynamic that I just realized in myself, is that I immerse myself totally in something.
Oh, yeah.
It's wonderful when you're in love, you know?
Right.
Or when you're watching a sunset, or when you're getting up in the morning and watching the dawn rise. But I do this indiscriminately. And I want to thank both of you just for letting me have a pause back to just look at myself and what I'm doing and how I overwhelm myself. So
it's easy to do. I do it too. So
and
I can resonate with, and I can resonate with your desire to be more immersed. I definitely get that as well. And I think that you can find a nice happy medium. If we just pick, maybe next time we meet up, let's pick a couple more coins together.
Yes. And I also, I think of my grandson, and, you know, of course I want him to have a future.
Yeah.
And, you know, and what a wonderful thing, because he's a gamer right now and he creates games. So I was really paying attention when you were talking about him. Again, this emotional investment.
Yes.
Really creates an interest. So just enough saying that. And yes, I would like to do that. And like, I love the idea of the diversity and the privacy and the sense of decentralization and privacy, and those kind of things. Just like, you know, the ding dong 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 is all hitting and resonating really strongly with me just as a vision. So any of those coins were perfect. And I was wondering again, the first one was about Cardano and their vision. And I know that's a favorite of yours. So what I assume, which probably isn't a good thing, you know what happens with that, but what I assume is that it's going to resonate on those same qualities, because those are high qualities that you have, or that you look for. So I just assume that, but probably not a good idea just to assume.
That's okay. No, you definitely bring up good points. There are some coins that I am invested in that I don't actually think the company's going to make it. But I do recognize they've got a great marketing team. There's lots of hype around it, and it's within a sector that I know is going to grow. And so I'm just there for the degenerate cash out at the end.
That's later down the road for me. It's like,
yeah.
Later, I mean, that's a sophistication of where I am now. So, and then this other question was the trends in the U.S., because of course I'm a U.S. citizen. So, like, that's part of who I am anyway. So, were there any other trends other than Ward to have the economy grow that you've noticed?
There are other ways that they can go about this. There definitely are. I don't think that America, the administration of the corporation, is interested in employing any of them, because that would require more self-responsibility as a nation. Right now, what they're doing is that they're just trying to tack the responsibility of their poor economic choices onto other countries in the form of tariffs. And that is a losing game.
Sometimes, like in our it's not a practice, but in the philosophy or the woman that we're following, she said the more specific the frequency can be for purification, the better off it is. So even if I just would be purifying with a particular specific focus in mind that was specific, it would add that frequency, to whatever's going on. And I think that's what I'm interested in, is the specificity of like an alternative trend that could be enhanced energetically and frequency.
It would be wonderful to see the US dollar be revalued to be backed by a real world asset. That would be awesome. I fear that the direction that they're headed is in the realm of an asset, AI, that is going through the same type of bubble that we saw the .com bubble complete. It's not much different. In fact, the comparison has been made by a lot of the tech moguls from the 80s who made their billions of dollars when all the computers went into our homes and then they connected them together with the internet in 1994, 1995. When that happened, it only took about a year for the amount of data that we started transmitting back and forth to double. Right? That has now happened since AI was launched, released to the general public. It was being used prior. But once the general public started to use it towards the end of 2023, since that time, the expansion of data has doubled. So we're sitting right now in this timeline of advancement of technology around the same time that we were right before the .com bubble. So we're going to see a similar thing occur. And again, I'm not saying that these technological advances are not something to back an economy by. I just think the timing is suspect.
I'm making this analogy in my mind, and let me know if this is not something you want to pursue, or there's time or whatever. But in astrology, what we have is an evolutionary leap. Like when a planet hits here, will have an effect. And then when another planet hits that same degree of sign, it will have an evolutionary impact because we are evolutionary. So I'm wondering with the .com bubble and the AI bubble, what would be the evolutionary leap that we're talking about? I don't know. And then just take that and put that over here. And then another thing I just want to confirm, there's a planet, Neptune, which is, this god of the sea, but he's also the god of movies, anything kind of that nebulous kind of like otherworldly kind of idea, movies, books, anything like that, dreams in the sense of fantasy, and also dreams in a reality, the distortion and the real thing itself. But that is actually going to, hasn't been a return to this exact degree and sign since 1861. And I don't know if you're familiar with U.S. history, but that was the beginning of the Civil War.
Yes.
And so just an interesting corollary to what you were saying about going to war for the economy, to get the economy back on the road. Now, I've always loved Lincoln. It's hard for me to believe that he would be complicit, but I also loved Obama.
Right.
So, I don't know. Everything is at question. I know nothing. I know what I've been told, so that's kind of like, or how they've been painted. So I know that. So I'm just wondering, that I just wanted to confirm in a way of just the whole thing of moving the economy in a different direction, or in an illusionary, because Neptune can be very illusionary, otherworldly, other dimension kind of thing. But it's also the artist, the muse, everything that's creative, So there's this wonderful correlation with the increase in society and the flow of the creative spirit in lots of artists and philosophers and thinkers and all that kind of thing, visionaries. So anyway, I a lot of mishmash. So I just want to see what you can take what you want and leave the rest kind of attitude.
My theory on that is we can create our own reality first. Right? So for me, coming in and taking control of my own finances first, right? Like, no matter what happens in the outside world, I still have control whether I use ADA or whether I use Polygon or whatever for my currency. That's where I'm going to create my own first. Right?
Don't you think, like Paul was saying, is that you see your bias? And then when you see your bias, then that kind of removes the veil of vision. So then you get to see more of what is present, what is really present. And I'm just adding that. I'm not saying that you don't do this or you do it or whatever. And I totally agree that there's an opportunity, I think, for the symbolic AI to come forward and make things much clearer without an emotional charge. That might be part of like the whole elimination of the emotional charge and the symbol of AI be that. Anyway,
it's interesting that you bring this up because I'm working on a piece alongside with Denise right now, talking about this notion of singularity. Because AI, and that we've been hearing the word, well, AI is going to reach a singularity. Well, we actually do most naturally communicate telepathically. That's actually our normal state. The awareness that we have within our bodies and our connection with Mother Earth, with nature herself, gives us the access that we need to see each other, other human beings that we interact with, as being one with us. And so, yes, we are experiencing that. And I think this mechanical AI that's coming forward is simply a manifestation of this pursuit to bring more unity to each other. Because now, like, I take a look at some of the stuff that I'm doing with AI right now. People criticize me. Oh, you're using AI? It's the devil's tool. Blah blah blah. It's like, hold up here. I've been really liking Mauro Biglano lately. He's a literalist, and he's also an ancient Hebrew translator. But all of his material that he has, he's got YouTube videos, and all of his material that he has is in Italian. Well, I don't know Italian, but I can go take the link from any one of those YouTube videos and plug it into some software, and it'll automatically translate whatever he said from Italian into English. So now we have this greater capacity for unity of language. That, I think, is what's lending this movement, this renaissance that we're experiencing, this massive expansion that's coming forward. And that what the temptation is, and I think that's what the, what do you call it, the construct, the nature of the construct is to make sure that we continue spending lots of attention on the construct. And so the temptation for everybody within the construct will be to continue paying attention to AI as the mechanism for our unity. Rather, I'm looking at it as an instrument where we can exercise the unity that is already most naturally ours. It's a completely different way of thinking, but that's the type of thinking we're going to need to start adopting today, so that 2 years from now, when those next generation of computer chips come off of the press, because that's what's happening right now. Right now, the computer chips are actually not capable of processing the amount of data that AI would need to in order for all of these promises that they're making for AI to do, in order for them to be accomplished. We don't have the computer chips to do it. So after a couple of years, when those chips are coming through, that will be another expansion of that technology where we get to practice more unity. And what I think is going to happen is that there will be a point where we just kind of look at all of the technology as this ridiculous thing we don't even need anymore, because we've gotten the practice to the point where we look for it in more natural ways instead of artificial. Oh, you're muted, my dear. Maureen, you're muted again.
Denise, is this the last chapter?
Oh, of my book? You never know.
Well, maybe it's at the beginning of, or the transition to a whole new book.
Yeah, you never know.
The bridge, yeah. Oh, I think that's fabulous. And, you know, just to be involved in that, to swim in those waters, and with another person, you know, that's glorious. So yeah, good luck. I mean, I really, may the wind be at your back on that one. That's great.
I have to go.
Me too. I've got to go.
Yeah,
Oh,
we went on today. That was great. It was
thank you for turning in this direction.
It was wonderful. Take
Bye-bye.
care.
Thank
Yeah,
you.
bet. Bye for now.